Hello, this is Bill Scheid from Applied Finance Research, and I found a really fascinating piece of research that I put together a couple years ago that I thought I would share with you because I know a lot of folks are interested in PMA SPY, the BMR 21 system, and the hybrid system, which combines both of those. So let me talk through what we have here because this is a fantastic way of comparing all three of those systems. So on the left column here, we have the years that we back tested, and I was doing this research in 2020, so that's as recent as we go with this particular look. And on the left side here, we have return. So we have the S&P buy and hold, then we have PMA SPY with sober and shorts. At that time, I was calling it select shorts and re-entry, but you know this if you've taken a course as sober and shorts. Here we have BMR 21, also with sober and shorts. And then here we have the hybrid system with sober and shorts. On the right side, we have the same four systems, SPY, PMA SPY with sober and shorts, BMR 21 with sober and shorts, hybrid with sober and shorts, but now we have the maximum drawdown data. To go through this year by year is super, super fascinating. As you guys know, I like to start with looking at the bad years first. So 2008, S&P dropped 36%, PMA made 25, BMR 21 made 8, and the hybrid made 17. That's really fantastic. And they did that on a way lower drawdown than the 47.6% that the S&P drew down, only 7.5, 10.2, and 4.4. So that's really outstanding. Then also, we do have our COVID year performance here. S&P made 18%, PMA SPY made 15%, BMR 21 came in at 108.9% on a monthly system. That's just absolutely ridiculous. Hybrid made 62.1%. I can see that I've got a calculation error here. The S&P maximum drawdown was not 133.7%. However, we can see here, actually it was minus 33.7%. I think I hit 1 instead of minus right there. So we can see here that the system though had a stupid low drawdown, minus 3.6, minus 3.6, and minus 2.7. So outstanding performance from our systems both in 2008 and 2020. Down here we have the compiled stats. So total return for S&P during this period, 233.5 on a maximum drawdown of minus 52.3. PMA SPY with sober and shorts made 331.5 on a maximum drawdown of minus 13. Outstanding. Here BMR 21 made 532 on a max drawdown of minus 15.7. And here we see that the hybrid system made 45.4 on a drawdown of minus 14.1. We have a few of the other stats down here too. Our return to drawdown ratio, I love looking at that one. For me, that's like really what's the value of trading this system versus why don't I just buy and hold in the S&P? And we can see that we've got some really big numbers for our system. Now, here's an interesting question that you might be asking yourself, and I'm going to do a video on this coming up next, so stay tuned. Why would we trade the hybrid system when we could just trade BMR 21, right? We see that BMR 21 does have a greater total return, and the maximum drawdown is not that much worse, and it also has a little bit better of a return to drawdown ratio. If we were willing to accept this level of risk, we would probably be able to accept this level of risk and get paid more for it. So the answer has to do with how BMR 21 performed during some of the specific periods in the early mid 2000s. There was a time where PMA SPY beat BMR 21 by like double. And so it was at that time that I realized, combining these two systems gives us the kind of steady, stable returns that we get from PMA SPY, but gives us also the boost of the BMR 21, and we end up with a nice kind of long-term blend. And I'm going to do a video on that to specifically show you the data on what I'm talking about there. So stay tuned. In the meantime, thanks for watching. Happy investing.